Before we get started, as always, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay? Alright, so let us get started straight away. Let's have a look at what we have. We had a very interesting first week of the year. The markets moved significantly. It was quite a good trading week if I have to be honest. I was caught up in a lot of things, so I didn't actually trigger any trades for our official Monday classes. So I think our first lot will probably happen today or during this week, depending whether we get triggered or not. But the highlight of the week, I guess, was the non-farm payroll job numbers. Now, a couple of interesting things there. The numbers came in significantly better than expected. I think they came in at 297 and the expectation was around about 200, which is a significant increase. That would have given the FOMC board, that warm, fuzzy feeling that after raising rates, that the job numbers supported the decision. However, as you would have seen against some currencies, the US basically lost ground, and it's when it makes us think, well, why is that the case when the job numbers were really, really good? What it came down to was basically the average earnings number was negative 0.04 in expectation of the zero point 0.2 that was in expected. The other major thing, always with the January job numbers, it does include a lot of those temporary jobs or holiday jobs that are created during that Christmas period. So they're not full-time employment, and a lot of the times it's more those permanent or casual and part-time type jobs. Okay, so that was the major thing with the US during on Friday when the job numbers came out. Another factor, and this is I guess leading into this week and for the rest of the month, we saw the Aussie dollar lose a lot of ground. Okay, now that wasn't really because of the US strength. All that loss of ground came on the back of poor China data. All right, and basically it had that trickle-on effect where investors started to lose, I guess, confidence in the Australian currency and started to basically flee the Australian currency, sell out, and we from the start of the week where we started in the 73 handle, 72.90, and we've actually got into the 69 region. So it was a week that we lost ground. So did the New Zealand dollar, and that was mainly on the back of the China data. Now they have stabilized, but the confidence hasn't come back to the market as yet. All right, GBP. Basically, this week that's gone, we've hit a 5-year low on the GBP. So we've broken that level and we've broken it well and truly by about 40, 50 pips, and we'll have a look at that in one moment when we have a look at the charts, which basically could kind of signal that we've taken out a whole bunch of stops and we could get a little bit of a temporary rebound or a fade into the market, and we'll have a look at that when we look at that chart. All right. Today, in Japan, we got a bank holiday. I think it's the coming of age day. And if there's anybody in the room that knows, I think it's the day when teenagers turn 20 or something like that along those lines. In any case, this is what the week has in store for us this week. Okay, the highlights, I guess, for us is a whole bunch of US data on Friday night or early Saturday morning, depending where you are. Okay, which we have retail sales and unemployment claims. We also have GBP monetary summary and their official bank rate decision. Nobody is expecting a rate increase from the GBP, and the policy statement is largely expected to be in a dovish nature. So in other words, nothing really, we don't expect anything to surprise. Sometimes where we have the vote, this is the vote of the board in how much in favour they are of taking a rate increase or a decrease. If we suddenly get a swing of say 4 to 5, where it becomes a little bit 50-50. Those kind of things can spook the market, and we can get a bit of a turnaround. All right. Having said all of that, nobody is really seeing that from GBP this week. Okay, we have retail sales. Unemployment change and rate for the Aussie dollar. I think the biggest data for the Aussie dollar for us is going to be the trade balance number from China. Okay, so that coupled up with the US data is probably going to be the things that are going to move us the most. All right, so with all that in mind, I think that the currency that's going to be under the hammer the most due to data is possibly going to be the GBP USD, and I think the Aussie USD as well is going to be very, very close second in terms of just raw data. All right, so keep these dates, levels in your calendar, and make sure that you're aware when they come out to see that you don't get caught up in a trade accidentally into something that you did not want to be caught up. All right, let us bring our charts out and we will get started. As always, for any newer people in the room, and I constantly see new faces, if you have a question, just type it in, and as I see the question, I will address it for you. Okay, all right, Aussie dollar. Now, this is a trade that I was really, really dirty on myself because I saw it just a little bit too late, and being the first week back, I was doing 1,000 things and I really wasn't ready for the trade, and I didn't take it. Can everybody see the trade? We've been monitored. What's worse, okay? What's worse about this? There's the shape. Everybody can see it, okay? What's worse about this is it's a pattern that's been very, very well established. It's got lots of touches on both sides. We can see here 1, 2, 3, 4 on one side, and we've got 1, 2, 3, almost 4 on the other side. So it's a pattern that is very, very well established, okay, and one that you can see coming from a very long distance away. So when we actually get what we want and we take no action, that is a frustrating thing to happen. What was the trade there, guys? Just help me out. It's a strong breakdown. That's right. So it's a break in the negative direction. Can I just get a show of hands? Did anybody take this trade? All the regulars, I'm 1,000% that you would have seen it because we've been looking at this pattern for a while. So I want to see who took it. Romy took it. Alan took it. I'm very happy as well. Well done, Alan. Anybody else? Okay. Now, as I've said in the past, this type of trade is a difficult one psychologically. The breakout trade is probably the most, out of the ones that we do on the Monday, it's probably the most difficult one psychologically. It's the one that I have psychological issues with as well. And possibly that's why maybe I didn't take it. Now, I'll be honest, I saw it, we were over here when I saw it, and I didn't want to miss out on that little element. I did not put a pending order, so basically I didn't take it. All right, so not to worry. For those of you who are in it, can Alan, where's your stop at? Can you give me a number? I just want to see where you stop at, and Romy as well. It's two people who are in this trade. Can you give me a level where your stop is at? This would be about the earliest that I could place it right there. This would be the other spot. 72.96 I've got. Let me see where that lies. So 72.96 is around about here in that area there. Okay. Oh, Alan's already out of that one, so he's already made his profit. Okay, well, let's say if we were in it, this is probably the closest that I would be willing to put my stop. So if I was to measure that out to here, roughly, what are we talking about? about 140, and the trade's there, see 142. So the trade would have hit your 1-to-1 point already, just right there. Okay, so the 1-to-1 has already happened on this trade. So what we need to look for now is, unfortunately for us, this trade's over. So if you didn't take it, it's over. All right, for the ones that are in it, your 1-to-1 would have just been reached, and you would be going for your second target. And of course, when you would have moved your stop to that level there. So let's see what else we can see on this right now. I need to get rid of these shapes now because they throw me off. The next region of importance is going to be down here. Let me just redraw this line again, one moment. Okay, so I'm just redrawing it in now. Okay, the bottom region, I always like to mark it out. It's the first or the next support level down low, which is around about the 69 region. Okay, are we in a downtrend on the Aussie dollar based off our moving average definition? Yes or no? Okay, I got 2, 3, 4, 5. Someone saying we're in congestion. 7. Okay, so it's pretty unanimous. Everybody says yes. As per our definition, we are in a downtrend. Now, for the person that said we're in congestion, in theory we're not, because we just broke out of a triangle. Okay, so we've just come out of the narrowing congestion. Okay, so we're not, yes, we haven't gone beyond this level there, but we're kind of just broken out of a region. So because the moving averages have crossed over there, from this point onwards, we are kind of looking for selling opportunities. So this is how we're going to play it. We're going to wait for a pullback. Okay, it may happen in this area here somewhere. And if we get a candle formation in that area there, that's the next trade that we're looking for. Okay, what it will also do is it will also give us enough room to get to this level safely for our 1-to-1, and then we stay in tight as we try to go for the 2-to-1. Okay, with China looking shaky, we're very dependent on that commodity prices not crash hot, oil going lower and lower, the US wanting to raise, going into a raising of interest cycle. We just need a little tiny bit of bad Australian data, and we're going down to 65 here, guys. Okay, so what we're trying to do is, I don't want to trade it based off a fundamental, but what I'm trying to say is we already have all the ingredients that we need for our Aussie dollar to go down and stay a little bit lower than where we have been. So it could just be something like really poor retail sales or something like that that knocks us into that area. Now, we're not speculators. I mean, we're traders, and we're looking for probabilities that are in our favor. So we're not willing to just go short for the hell of it, so to speak. So what we're going to look for is we're going to look for a pullback, and we're going to look for a price action entry that will give us the run down. Is that message clear? Do we all understand what we're looking for and what we are trying to achieve out of the Aussie dollar? At the moment, I got nothing. We should have been in the trade. Some of you did and took it. Well done. Let's look for the next one right now. Okay. All right. So let's carry on. Let's move to the next chart. Euro USD. Okay. I want to highlight something. Last week I drew this congested region right there, okay? And I said if we break on the downside, it's not really a breakout. I'm not really interested in the downward break because we still have all this over here. Consequently, we got a really good candle that broke down. So that was not a signal to go in, right? Did anybody take that as a short? Can I just get a show of hands if anybody took that as a short? Okay, good. Okay, no one. All right. So this was not a trade. I simply marked out the region. If I broke up on this side, then yes, that one would have been. Okay. So I don't need that region anymore. So let's get rid of it because we've taken out the low. But what I did notice is I notice now a bit of a channel. It's just starting right now. What do we think of that channel? Let me zoom in on it a little bit better. Do we like that? Can I just get a consensus? What do we think? Is it ready to trade right now? I mean, I'm not talking about do we have a trade set up, but do we have enough touches to say, yes, we're ready to trade? Okay, good. All right, so the way that I see this is I have one touch here, two touches, one, two, even three. Okay, this is almost one, but not quite. So I'm on the spot, right? So that means, and on top of that, I am right here, right now. So I don't have a setup as yet. However, I will be looking for one tomorrow. All right. What happens? What happens if we get this tomorrow? Let me just draw something for you. What happens if tomorrow, where this candle started there, you come in and we get that candle like that? What would you, what do we feel about that? Because that could be the case tomorrow. Okay. I've got two people saying they would buy. Three, four. Okay. So that would be a clear buying signal. True or not? It would be a break out. Now the channel itself is pointing downwards. So a break up is a legitimate signal. Okay. Now, if that trade makes you feel uncomfortable, the only thing that I would want is would like that one to be clearing over that height, which I've drawn it specifically like that, so it does. Okay, so that would be a legitimate trade. Now, Simon's made a comment on the EMAs. Uh, if I take that trade there, it's actually a pure pattern trade. It has nothing to do with the EMAs, so I'm not actually looking at the EMAs to help me out on the trade. That would purely be a trade that we've broken on the correct side of a channel. Okay, so that would be the reason for the trade. Even though the EMAs are in my favor, that's kind of nice, but it's not really the major reason. All right, so this could happen tomorrow. So you've got to look out for this trade. Now, if this happens tomorrow, okay, and you do not take the trade, you need to question whether you want to include breakout trades in your trading plan. All right, because it's it's the type of the trade that you feel really uncomfortable about, and if you don't like them, well then it's better that you don't trade them because they make us feel uncomfortable. All right. So in any case, that is one possibility tomorrow. The other possibility could be that we have something like this. and then the following day we get something like this, fractal up there, and then bang, we try and come back down the channel. Okay, so that's the other possibility. So this would be Tuesday morning, Wednesday. So this would be on Wednesday morning. So we'd have to wait 2 candles to complete before we find out. All right, so with the Euro USD, I don't have a trade right now, but we are at a very critical point on a nice little uh, daily channel. So what we need to do is we just need to see you inspect this candle tomorrow morning. If we've broken up, we've got to trade north. If we haven't, we wait for the next day to see if we will have an inside candle set up. And then if we do the following day, then we can put in our pending orders. All right. Does everybody understand what we've done and the reasons for that? Does anybody have any questions on that? We're all good? Fantastic. Okay, so that's our plan on the Euro USD, GBP USD. Okay, GBP USD just keeps falling. It's falling, been falling and falling and falling. Um, this is the type of trade that we really want to try and catch a couple this year where we just get this really nice run. Okay, unfortunately for us, this one here is well, we're not in it at the moment. And for those, I'll cover it again soon, but I haven't done it for a little while. For those of you who know the T-Chaser strategy, you can see that this type of trade you would have been in from around about here where I've got my crosshairs. So, and the trade would be up around about 360 pips. You could have actually, there was lots of entries. There was another one up here. So it's the when we get a really good run on and a trend continues and runs, it does provide us some really good opportunities. Okay, we just need to be patient and find them. I think for the GBP, the plan this week is exactly the same as last week. Now, oh, I was going to show you something. So there's the last low, and we've just broken out from it. And if I go out to a monthly chart, you can see that we haven't been this low since that point there, and that point was January of 2010, which was 5 years ago. So we haven't been that far low since then. I think what we need to do with this one is let's wait for it to come back and try and give us some kind of an entry, and then we'll try and continue in this direction. Okay, as it stands right now, there's nothing there. What I'll also keep on my charts, I will continue to extend this line out because breaching it back over to the other side for me could signal a change of direction, and we've got to be ready to go in the other way if the opportunity arises. Okay, so GBP USD this week, even though it's got a lot of data coming out, the chart is just one-sided and we're not in, so we have to wait for our next opportunity to jump in on it. Let's move on. Gold. Okay, gold broke out of the area that we specified and it kicked on a little bit. So it's giving us a little kick there. Did anybody trade this, by the way? I know there's a couple of people that trade gold. Was anybody long gold? No, no one? Okay. Yeah, a couple of people saying their account's too small to trade gold. You do have to trade larger when you trade gold, so something to keep in mind. All right, so considering we've got the breakout happened, okay, if you are interested in this particular type of trade, the next logical direction is for it to come back into this area, test it, and then continue. That is the classic trade straight after a breakout. As you can see, our moving averages have crossed over, so we're looking for longs. So we could easily wait for the pullback, look for our price action setup. So we could get something, I don't know, like this. I'll make this one the red one. Fractal over here into that, and then we break into that direction as such. Okay, so we've gone back to the 1100s. The 1000 at one stage looked under fire, but we've had a bit of a turnaround. And if the market truly has reversed, we'll wait for the little pullback. If you get the entry, that's the trade. It's the only thing that's available at this particular point. Let's carry on. US yen. Okay, remember last week we marked out this hot spot. This is the beauty of price action trading. Okay, I marked out this spot and I said I was going to look for something if it happened at that area. If you look at these two candles here, that is an inside candle. Now, obviously this happened, all right, but before that happened, if you can, I don't know if I can draw this, moving it to the side. No, I can't. Before that happened, when this candle here started right there, at that point in time when none of this existed, so I'll rub it out just so that when that did not exist, there was a fractal over here, and that would have been an inside candle. I had a pending order in my system over there, so if the price went up and broke it, then I would have been a buyer trying to trade the bounce off this support line. Okay. However, the candle opened, it started to go up and then just broke the bottom of that candle. As soon as that happened, I cancelled out the order, and the price action protected me from being a buyer, and consequently it actually broke down and continued in this direction. Okay, so this is one of the nice things about trading with a price action. It just makes it a little bit easier psychologically to make your trade and to assist you. Question being asked, with gold strength, does that mean US weakness? Usually they're inverse proportional, okay? As non-farm payrolls, as I said at the start of the class, the job numbers were good, but the average earnings were low. So it was like a camouflaged data. The market realized this, so the US dollar lost ground. As the US dollar lost weakness, basically think of it this way: people that have spare money and looking for places to invest in it, they had it, say, in US dollars. It's losing credibility and strength, so they pull it out of that and they put it into more safe haven type situations. Gold is considered a safe haven in times of turmoil because there's only a finite amount of the metal on our earth. So to summarize, yes, when dollar weakness, it usually equals gold strength and vice versa. Okay. All right, I saw that question late. Sorry for that. Okay, so US yen right now, we're kind of like in no man's land. Oh, let me have a quick look at a 4-hour chart. It's a chart that I just don't want to touch. Okay, so I got nothing on the US yen. I just need for it to clean up a bit and show me something a little bit prettier. So this week US yen, will leave it alone. Okay, let's move along. Euro yen. Okay, now we're getting somewhere. Who likes that channel? Need a show of hands. Okay, I've got about nine of you, 10. Okay, it's not the smoothest one, but it's a channel. Okay, top line's really strong. The bottom line is, well, we've had a bit of a bounce off it and we've got a fractal down right here. So having said that, do I have a present trade at the moment? Yes or no? Okay, I've got one yes, three no's. Anybody else want to have a guess? Do I have a trade set up there that I should be in? Let me help you a little bit. Is that an engulfing candle? Yes, it is. There we go. So it's an engulfing candle setup. Now, with engulfing candles, for the very, very aggressive engulfing candle, and when you trade it off a pattern, because you know that the floor is here, if the pattern is going to hold, the floor is there. If the pattern doesn't hold, obviously it's going to break and continue down. Okay, but with a floor that is already been predefined, because this parallel line's been drawn in already, your entry would have been right there at the start of this candle. Now, if you did take the trade right there, this fractal would not be there yet. Okay, so that's the aggressive. Now, if you did not, if you were waiting for the fractal to appear, the fractal appeared today, this morning, here. When the market opened here, the fractal popped up. So by being conservative in this example, you would have actually got a much better entry price. Does everybody understand what I'm talking about? And do we agree with that? Yep. Great. All right. So in theory, if we were waiting for the fractal was on this chart this morning at 9 o'clock. Okay. So the entry would have been at 9 o'clock. So let me see how much it's already moved, not in our favor. Let me see. So let me just go to a 15-minute chart for one moment. I just want to see from the open to right now, there's about 26 pips. Okay. So the question is this. Do we take this trade? Now, yes or no? I've got two no's and I've got about 14 yeses. Okay. All right. So the the funny thing is that one person that I can see one name that I recognize that said no, who's going to be in this trade whether they like it or not because they actually plugged into me. Um, I'm going to take this trade. This is part of my rules. Like if I don't take this trade, it basically I am breaking my rules. Does everybody agree with that? Okay, so if my rule says that I'm a pattern trader, it doesn't get clearer than this. Okay, so I have to take it. So I'm going to take it. Let me measure up now. The second part of my question is, should I take it all at market right now, or should I take half of it at market and say, try and get a bit of a better price, just in case it drops down a little bit, put a little pending order here and take the other half there. What do you think? Split it? What could happen is this could just go, and if it goes, my second part never gets triggered. All right. So this is so if I go the whole lot in now, I'm in the trade. Okay, slightly not as good as this morning, but the risk level is still going to be the same because I'm going to limit it to whatever risk I'm going to limit it to. Okay. All right. So all right, let's just go in at market. we've got to do what we've got to do. Let me measure it out. Give me 1 second while I measure this out. Let's make the stop 135 pips, which will put me just below. Just let me get my calculator. And let's put our risk level at, so this is, I've reset my account, so I'm on a $3,000 balance. So let's go at $60. So 60 divided by, what did I say again? 130 or 135? Sorry, I forgot. Let's make it 135. Divided by 135. I've got to trade at about 44 cents a pip. What am I on? Euro yen. Aussie yen is trading at 81. So 20%. Okay, the risk, I'm probably going to go over just a little tiny bit on risk. I'm going to be about $65 or something. I'm going to take in a 0.04 trade, okay, which is actually good because I can split it divided by 2. All right, so here we go. Let's put it in. I'm going in at market right now. For those of you who are plugged in, if you log in now, you should see that trade on your account. Okay, let me put a stop loss in. I'll adjust it in 1 second. Okay, and so I just want to make sure I've got the right amount. Yeah, 135. This is first target. Okay, I've put my target that I've put up on my screen there. That's my 2-to-1 target. My Supreme will get me out automatically at my 1-to-1 target. Okay, so there we go. So we've triggered, we're in at market. So we're trading the channel. Just to clarify to everybody, what we've done is we've traded the engulfing candle at the channel. If the market comes down and hits us and stops us out, well then that's just bad luck. That's the probability of trading. What we're hoping is that the market gives us something back in that direction. Okay, all right, let's move on. Kiwi dollar. Kiwi dollar, another, it's not quite a triangle because this touch is not the best of touches. If this one was touching there, yes. However, this line is kind of, we have broken it. And fundamentally, if the Kiwi starts to lose ground against the US, it's the kind of trade that you wouldn't mind being in short. Now, there's a couple of things here that I want to show you, okay? Because I believe that we could have trades in both directions on this one, all right? Now, I do want to sell, all right, but I'm going to be a little bit conservative. I could, in theory, enter right there. I've missed a little bit of the trade, so I'm not going to enter it at market. But what I do want to do is, if this pulls back into some region over here, I do want to attempt to trade it down. Okay, does everybody understand the trade? So essentially the trade that I'm trying to catch is, we're breaking out, and on top of that, if I catch it over here with a pullback, I could be catching the pullback of a trend kind of thing. Okay, so Paul's just mentioned the next point that I'm about to highlight, but first of all, let me just get this first trade going. Does everybody agree that we're happy with that? Yes? Okay, so what I'm going to do is, because it's an actual breakout, we have every right to be in this trade right now. All right, so I'm not going to wait for price action retracement. I'm just going to try and catch this trade at a certain level. So I'm going to draw a mark on my chart. I'm thinking here, and I'm drawing that purely based on the chart. At that level, I would like to go down. All right, and my stop is going to be just there. What do we think? Who's happy to place a pending sell where the way that I've drawn it? Can I just get a show of hands? It's 1, 2, 3, 4, 5, 6. Okay. Someone tells me that they did a T-chaser trade this morning. Okay, yes, there was a T-chaser entry. That's correct. Okay, fantastic. All right, so let's go ahead and do it. Let me just measure out. Give me 1 second. So this is a pending order. We may not get triggered. Let's call it 6609. Let's make it. So it'll be 6609 will be the entry. And the stop will be, say, 6685. 6685. That makes it 76 point stop. So let's go 60 bucks. 60 divided by 76. Got to trade at 80 cents. So let's go 0.6. Okay. So let me place the order now. Zero 6. 6609 is my entry. My stop is 6685. And my target will be 76 times 2, so it's 150. $64.59. That's my 2-to-1 target. Let's place it. Let's see if it looks right. Okay. Did everybody follow what I just did? So there's the order, and it looks correct to my eye, and I like that this level is still above that low, and this is my 2-to-1 level. So basically what we're hoping for is that the trade goes, hits that, then I'm short, my stop is over there. So if it goes back and then just continues, basically we get stopped out. All right, so that trade is in the system. Let's find out if we get stopped out. So that's the first half. The second half, and somebody picked it up already, is if you notice, we've got 1, 2, 3, 4, 5, 6, 7 consecutive days in one direction. At the moment, this would be the 8th day, but there's still a long way for this candle to finish. So what we're going to do is this. If tomorrow morning, when this current candle finishes and it is a red candle, that'll make this number 8 consecutive days. And if that is the case, tomorrow morning when I look, we will be buyers for a short fade of the market. Okay, so if it happens that tonight is a really negative day and it comes all the way down to that level like that, which matches up with this, that will even make me feel better about the trade. But it doesn't matter. If it's a red candle, we're going to try and fade it. All right, and if that happens, I will send that message out via Twitter, and of course I'll just take the trade. All right, so does everybody understand that? The reason for that? To get 8 consecutive days in one direction is extremely rare, so it's a statistical based method. It happens so rarely that I never cover. I've covered it with you guys on a Monday session, but I've never done it like on a Thursday because I'll cover the whole strategy in like 5 seconds. All right, so we're going to wait and see. We may have 8 consecutive days in one direction. If that is the case, we'll be buyers, but we'll still keep our pending order there. If this market keeps going down and starts to get away from us, what I may do, and I need to see the chart, see what it looks like, is we may bump this entry a little bit lower, but not too much. I'm not going to chase the market. All right. So, but I will notify you if that happens. Any questions? All right. So this chart looks exciting. So I get the feeling we may get a red candle today again. So we may have that trade that we want tomorrow morning. Okay. All right. Last one for the week, Euro Aussie. All right, look at this. Euro Aussie. Um, we've It's the very start of a channel. We've got 1 and 2, 1 and 2. So we can look to see what happens here, see if we actually can get a setup to try and trade it back down. Can I trade it up like that? Yes or no? Good. Everybody said no. The answer is no. Okay, because we're sloping upwards. All right, so what we're looking for here is to see if we get a price action entry that will give us the opportunity to sell the euro against the Aussie. Okay, all right, so let me recap what we've done today. If anybody's got any questions, type them in right now while I go back and recap. Aussie dollar. We've broken down. What we're going to do with the Aussie dollar is we are waiting. Well, we'll have a look if anything happens in this hot zone for a counter trend trade, but we're waiting for a pullback and then the opportunity to possibly sell into the Aussie dollar. Okay, that's what our Aussie strategy is. Euro USD, we're on a channel, we're on the fringe, on the top end of the channel, so we could get a break up as such, which will head us this direction, or we could possibly get an inside candle formation, which will not be ready till Wednesday to come back down. GBP USD is just on a run downwards. We need to wait for correction and a bit of a pullback before you can see any kind of entry. Gold, again, we're waiting for a pullback to be buyers out of the breakout zone. US yen is the worst looking chart this week, so we're not touching it at all. Euro yen, we've got a live trade on right now, so we've just bought the euro yen at 128.07. Kiwi dollar, we've got a pending sell at 66.09. Stop at 66.85 and our target 64.59. Okay, so we're sellers if we get to that level, and we're also looking tomorrow morning to see if the current candle is a red one. If it is, we are going to be buyers. Last, Euro Aussie, new channel just starting to form, and we may have our first opportunity to take our first short trade should we get the price action on the fringe for us. Okay, that's pretty much it for this week. Any final questions? Anybody? What's the stop for the euro yen? 130.83. Okay. Anybody else? Any questions before we call it a day? By the way, I've received quite a few trading plans, so just keep them coming in. And I haven't responded to any. I've just been a little bit busy, but I will start looking at those from pretty much tomorrow, and I'll start responding to those. This Thursday we'll start off. We'll have a look at another strategy, and we'll kick off 2016. As always, any questions, just please email me at the Traders Club. Take a screenshot of your chart with your question, make it easy for me, and I'll respond to you as always. Other than that, have a fantastic afternoon, and I'll see you all on Thursday. Bye for now.